The promise sounded safe. Real estate, retirement, a steady return. But prosecutors say this Seattle area investment fund was really a slow financial gutting. We like to think fraud looks flashy and obvious. Often, it looks organized, familiar, and patient. That is what makes stories like this so unsettling. This is the case of Tamara King, a former Washington state real estate professional sentenced to federal prison after prosecutors said investor money financed luxury spending, tax evasion, and years of lies. And the sting here is not just the money, it is who lost it. People who thought they were funding their future, not someone else's lifestyle. According to federal prosecutors, the scheme began with a real estate investment fund called Halcyon. From 2009 through 2013, Paul Wallen solicited investors. He told people their money would help buy and renovate an apartment building in West Seattle. He also said the pooled funds would support other real estate ventures. Investors were told to keep their money in for at least 10 years. In return, Wallen estimated a 20% annual return and said he would take a 1% management fee. That pitch drew in 22 victims, most of them from the Seattle area. Prosecutors say they collectively invested about $2.25 million. Then came Tamara King. Federal records say she and Wallen began dating in 2012, married in 2013, and later managed the fund together. According to the indictment and later sentencing records, the couple began misappropriating investor money from 2014 through 2018. The fund stopped acting like an investment and started acting like a personal wallet. And the paper trail, prosecutors said, was not sloppy. It was structured. In the October 2023 indictment, prosecutors alleged that on February 12, 2014, King secretly transferred $26,000 from Halcyon to an entity they controlled called HTI Wallen Team. The same day, according to the indictment, she moved another $25,000 and described it in a private memo as a loan. Prosecutors said there was no promissory note, no security, and no repayment. The memo was never disclosed to investors. That pattern allegedly continued. Prosecutors said that on September 9, 2015, another $125,000 was quietly moved out of Halcyon. Again, it was labeled internally as a short-term loan that was never repaid. The indictment says some of that money went directly into King's personal bank accounts, while other portions covered business expenses and Wallen's salary. That detail matters because it suggests the scheme was not one desperate withdrawal. It was repeated, documented, and hidden. Federal prosecutors also alleged the defendants diverted $300,000 from Halcyon into another investment vehicle they controlled, Kahala Investments CC4R LLC, on August 4, 2014. Then, according to the indictment, they made two more $25,000 transfers into that Kahala project in late 2015 and early 2016. Prosecutors said undisclosed internal memos were again used to explain the movement of money. And prosecutors said the Kahala project became another place where investor funds bled out. The indictment alleges that in February 2015, King transferred $60,000 from Kahala back to HTI Wallen Team. From there, prosecutors say, a cashier's check for $54,300 paid a treatment facility for Wallen's personal expenses. In all, the indictment says about $287,000 in Kahala funds went from that project to HTI Wallen Team between August 2014 and May 2015. By April 2018, prosecutors said Kahala had been liquidated for net proceeds of more than $1.3 million. But Halcyon and its members, though entitled to a share because Halcyon owned equity units in the project, allegedly received none of those sale proceeds. The government also alleged that when Halcyon's main property was sold in December 2015, the fund received net proceeds of about $2.4 million. But instead of preserving that money for investors, prosecutors said the defendants embezzled part of the sale proceeds through more concealed transfers and sham loan paperwork. In one example laid out in the indictment, after only one portion of proceeds from another project called Azalea was returned to Halcyon in September 2018. Prosecutors say $156,477 was turned into a cashier's check. Prosecutors say that payment went to Wallen's ex-wife to satisfy his alimony debt. The supposed loan backing it, they said, was secured by property Wallen did not actually own. So, when officials later described Halcyon as drained by the end of 2018, they were not talking about one collapse. They were describing years of money moving through side entities, private memos, cashier's checks, and internal labels that prosecutors say concealed outright theft. Prosecutors said King used stolen money to support a lavish lifestyle. Evidence at trial included a customized Tesla Model X, an 8.5-carat diamond ring, and cosmetic procedures. At sentencing, the Justice Department said the Tesla cost $121,950, and the ring cost $49,300. Prosecutors also said nearly $189,775 in investor money went to King's personal tax debt, and that she employed a personal assistant between May 2016 and 2019. The government's theory was blunt. Wallen brought money in through the front door, and King moved it out the back. Like a retirement nest egg turned into a private ATM, the fund was drained piece by piece. By the end of 2018, prosecutors said the money was gone, but investors were not told the truth right away. According to the 2023 indictment, Wallen also gave some investors annual fair market valuation forms in January 2017, January 2018, and December 2018 that substantially overstated Halcyon's value. Prosecutors said those forms helped conceal that the fund's assets had already been drained. According to the Internal Revenue Service and the Justice Department, Wallen sent a letter in December 2018 falsely claiming a contractor's cancer diagnosis had caused a delay. The indictment is even more specific. Prosecutors said that on December 15, 2018, Wallen emailed investors claiming Halcyon had suffered a loss outside management's control. He said the project was halted because a contractor had been diagnosed with lung cancer. Federal authorities say the contractor never had that diagnosis. It bought time, but it did not save the scheme. In October 2019, King told investors the investment had failed and all the money was gone. The remaining investors lost their entire stakes. The damage was not abstract. Victim statements describe delayed retirements, fear over caring for disabled spouses, and the humiliation of trusting the wrong people. One victim said King used stolen money for a bigger home, expensive credit card bills, and luxuries the victims themselves could never afford. That is, the moral violence in crimes like this. Financial fraud is often discussed in spreadsheets. In court, it sounds different. It sounds like panic, betrayal, and years of planning suddenly erased. The FBI and IRS criminal investigation both worked the case. Officials said investors believed they were prudently saving for retirement, when in reality, the account was being drained. The tax side of the case was serious on its own. According to the IRS, King failed to report more than $1.6 million in income over 3 tax years. Authorities said she reported just over $188,000 in total income, when she had actually received about $1.85 million. The Justice Department said the resulting tax loss to the United States was $551,758. In December 2025, a federal jury convicted King after an 8-day trial. The counts included conspiracy to commit wire fraud, money laundering, and filing false tax returns. At trial, King blamed Wallen. She claimed he told her the loans were allowed and later wrote that being used in the fraud was the biggest regret of her life. But the sentencing judge did not buy that account. Judge Ricardo Martinez said King lied on the witness stand and called her the primary instigator, driven by pure greed. On May 15, 2026, King was sentenced to 55 months in federal prison. After that, she is scheduled for 3 years of supervised release. Her attorney told Realtor.com there will be an appeal. So, while the sentence is in, the legal fight is not necessarily over. Waln had already pleaded guilty to wire fraud conspiracy in June 2025. He was sentenced to 33 months in prison on October 31, 2025. Prosecutors are also seeking money back. A hearing set for July 24, 2026 will address restitution and forfeiture of assets. That means the final accounting is still ahead. And for victims, restitution hearings can be painful because they force people to measure losses that were never just financial. The larger lesson is simple. Fraud does not always arrive with chaos. Sometimes it arrives with a polished pitch, a trusted face, and a promise of patience. And by the time the truth appears, the dream it sold, a home, a retirement, a safer future, has already been spent by someone else.